morning, traders and investors. Happy Friday and welcome to Pre-Market Prep. Today is Friday, February 7th, 2025. Pre-Market Prep is your best place each morning to get overnight news, to get breaking news. We're going to have some breaking news here in about a half hour to get your trading ideas. And of course, probably most importantly, to get some good education at the start of each day. At 8:30 a.m. today, we are going to be getting jobs data out of the U.S. government, private sector payroll, government jobs, not that important government jobs, but we're breaking in with those at 8:30 a.m. On the earnings parade, it is continuing here on this Friday. We had results out of Affirm last night, also Amazon. What else are we talking about here today, earnings-wise? Elf, big price reaction, and Elf Beauty, also Pinterest. Guest today, 8:35 a.m., Mish Schneider, Chief Strategist at MarketGauge.com. And then a little bonus guest here, folks. Stay tuned in till 9 a.m. Eastern Time. We're going to be having on Blue Putnam to talk about a big thesis that he is working on. Let's take a look at how the markets are performing here this morning. But first, folks, let's run that intro.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
All right, good morning, traders and investors. S&Ps are down 1 3/4 handles because absolutely nothing happened in the market. Nothing happened after hours or pre-market. So we're down 2 handles, no big deal. The buck up 16 cents in the futures, 107.71. TLT knocking on the door at 90 here ahead of the jobs number, up 12 cents, 89.97. USO, lower lows again today, down up, but it's up on the day, 66 cents, 76.11. Gold backs off that all-time high, but is still in the green, up 70 cents at 264.13. Silver flat, 29.35. Bitcoin. We haven't been talking much about Bitcoin. It's under 100K, but it's still up $1,100 today at 98,365. We're going to bring Dennis up. We're going to bring Christian up. And Dennis, what a quiet night you had. Absolutely nothing going on. I mean, this is boring. We should call this boring market.
The opposite, really. I mean, you look at the indices and you think absolutely nothing happened, but there is individual moves that are violent. And I mean off earnings, these earnings gaps, and we talked a bit about this yesterday, they have wild swings. Like, why does this occur? Quick teaching moment. We'll just explain it. Because anybody like market makers all back off during earnings reports because they don't want to sit out there with their orders and get picked off. Because if it's a bad report, so let's just say Amazon, for instance, let's use it as an example, close at 238. If you're sitting out there bidding 238, like 80 cents down, that's like a lose-lose order. Why? Because if they report good numbers, it goes up and you don't get filled. If they report bad numbers, it hits you and you're killed. So it's like a lose-lose scenario for providing liquidity into earnings reports. So everybody backs off. Orders out. I'm out of there. Maybe you have some of the expected move, people playing around there, but there's nobody close. So then the algos get the numbers and they just hit whatever is there. Or if it's good, they buy whatever is there. And then, so now the book goes empty because they just cleaned it out. But then, there's interpretation and maybe there's human beings coming in saying, look, those numbers aren't that bad. So maybe let's buy it back up. Maybe Cloudflare might be the better example on this because NET, this is exactly what happened last night. NET reports the headline numbers. They hammer the stock. Absolutely hammer it. You wouldn't see that today. You're like, what are you talking about, Dennis? Net's up 10%. No. Absolutely hammer the stock. You can't even see it on Joel's chart because it was so fast. How low did Cloudflare get?
This is 122.32.
Down 20 points, 19 points. Somebody will say, oh, Dennis, it wasn't down 20, it was down 19. It was down 20 points last night. Round it to 20. $20. It was down there for about a minute. and then the buyers come in, and then they're looking for anything to lift, but there's nothing to lift because they just cleaned the book out. So now they're going up, 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 and they have to go way up to try to find cover, especially the algo that just hit it, which is now dead wrong trying to find cover. And then what do? We go up to what do we go, Joel? The next bar? 157 or something?
158.99. And Dennis, that was a 2-minute move. It wasn't a 1 minute.
Oh, it wasn't 1 minute. I'm exaggerating.
You're sure you go. You're wrong
minutes.
again.
We hammer at 20, then we buy it up 38. And then we tank it back down to even. This is the market we're in. These are the earnings gaps. Christian, crazy moves. Like, I mean, in some of these stocks, like the violent whipsaws, they're fun to watch. But I mean, as an investor, like, holy crap, money being made and lost very, very, very quickly. Talk about these earnings gaps because this is just a good segment.
Good morning, guys. Nothing but net for you this morning.
Nice one. I like that one.
The crazy thing is it feels like there's a lot of money that could be made on some of these moves, but it also is a lot of money that could be lost on these moves because if you're on the wrong side of this stuff, I mean, look at some of the moves this morning besides net, which is an unbelievable, to your point, what an unbelievable move. Did you see where I bought it all the way down there? I'm just kidding. And what's crazy is sometimes you look at the numbers and you're like, hey, I don't really get it because the numbers aren't that good to be justifying that. And, I think if you look at the numbers, they did okay. Their revenue was about 2.09 billion versus estimate 2.09. Their adjusted EPS 79 to 80 cents, estimate 86 cents. So I don't know, so it's not
like they guided down huge. It's not like they raised huge. It's kind of just the numbers are there. And the violent move happens just on what seemingly seems like kind of normal numbers.
Right. It just shows, I guess, the group is hot. But to, also look at some of the moves. You have Docs up 24%. So that's the winner if you caught that one. If you went long Bill, BILL, that name's down 29% this morning. So yeah, there's some really outsized moves for some of these names. And yeah, I mean, if you're not on the right side of this stuff, it could either ruin your week, I think, or it could also make your week too, depending on which side you are.
Yeah, I mean, we know everybody on Twitter is always on the right side. They all sold their bill yesterday, and they all turned into docs yesterday. We know that. That's a joke, but that is honestly somewhat true because nobody talks about their losers on Twitter. Everybody is the genius trader that they are. But there is real losses here, folks. So it's not all peaches and cream. I mean, you look at the S&P, and you see the S&P flat, and you look at, what the S&P has done. It's kind of just holds up. It is so insulated, and this can move us into the ETF effects conversation here too, Christian, because it is so insulated due to ETF effects. When they sell something, they buy something, else in the index, that might have nothing to do with it. Like we've talked before about the QQQ non-tech components, and I've taught, we have the course on PreMarket.com.
We should do that again. We should do that.
And we have the course on it. You can pay, $99 to learn all about it. But I mean, it's like there's 22 or 23 non-tech components. On a day where it was especially prevalent, with Amazon not moving much today, the QQQ effects are not very prevalent because Amazon's only down 3%. But when you get a day where there's a major tech company reporting and it's down 7, 8, or 10%, it is almost guaranteed that those non-tech components are going to go up. It's all like nothing's 100%, but it's pretty much guaranteed that Pepsi's in the Qs. I know people don't believe that. It is. It's in the Qs. Pepsi goes up on the day when you have like Meta down, 10% or, another, component down significantly here. You've got to know this stuff because right away when I'm doing stuff, those are stocks I try to go buy. People, they'll call it rotation, which it is, but it's actually rotation within the ETFs and the ETF effects itself that really cause these moves to happen. Like in some cases, you see T-Mobile rip up $3-4 on like a major, tech miss, like a major component. So it's funny at all this stuff, but ETF effects are real, folks. ETF effects are what cushion this whole market. It's what keeps everything elevated as well, and it's what buy the dip has mentalities in there too. Again, I said, as the new ETFs come in, they're always coming in the sexy names. So it keeps those names elevated as well. But, individual stocks here, lots of moves. We can go wherever you guys
let's
want.
go to Amazon. Let's go to the big dog. Let's get it out of the way. I guess you had to have your algo program that you don't care about the 38-cent beat, but you don't care about the slight sales beat, but you do care about the lower guidance. That's if I had an
you always care about the lower guidance.
Right. So lower guidance, and I will say this, and I'm not saying anything bearish because part of my my ETF or my thing is getting destroyed. But this is the slowest growth rate for Amazon in a long time. Boom. That's it. So there you go. You hit down. I mean, they had to blow it away. I mean, right up near an all-time high. Now it's kind of quiet. If you were prone to buy the 50-day moving average, well, you took $3 worth of heat. Pre-market low 221.77. Unless we get a bad jobs number, I don't think you're going to see that. And I think the most relevant number is 236.01. That's the bottom of yesterday's range. Let's see if they can fill the gap. And the only reason I say that is if you go back to NVIDIA, it still hasn't filled that gap. The market 2 weeks is still digesting that information. Now, that doesn't say it's not going to do it. It's bumping its head up against it. But Dennis, talk about the trading action, and Christian, you can talk about the fundamentals.
Let Christian go in here for a second because the chat's all over my Pepsi comment here, so I'm talking with them.
I think what's kind of interesting here. So I'm reading a headline that says Amazon falls on currency headwinds weigh on outlook. So I don't know if they're blaming it on that, but I'm interested to hear what Dennis says too, because I think this has a chance that the dip gets bought in this one. The other thing that from these big names, and it's the same thing with Google when they reported. You can extract some information that might help you in some other areas of the market. For example, when Google reported, obviously they fell, but they talked about AI demand and how much they're going to be spending on AI. And what was the stock that went up? If you remember, what was the stock that went up in when they mentioned that on the conference call for Google? Anybody remember? Does the chat remember?
Boy.
Sorry. They mentioned AI. Think about what. There we go in the chat. Broadcom. So Broadcom went so there's these plays that you can get from the information that they're talking about, and Broadcom shot up on that, and that was better than the actual So if you're looking at a play like Google for earnings, you could actually find something better. And there's a name that also went up with Amazon talking about how much they're going to spend on AI. Anybody know what that name was that went up last night? Not Broadcom, close. And it's another chip name. It's another chip name that went up on it. Because some of these chip names are dedicated to this. I think someone just put it, Marvell. MRVL went up when it shot up. Look at how much Marvell is trading up this morning. So it's almost better than, hey, instead of trying to figure out what Google or Amazon is going to do on their earnings report, just wait to their earnings call. If they say something in their call, and I think Dennis was talking about this yesterday about how sometimes it's beneficial, sometimes it hasn't been to listen to the earnings calls, but you don't even you could just say, hey, who are they going to mention, or what are they significant are they going to mention? Because these companies are so large and they affect such a big ecosystem of chips or some other type of thing. And NVIDIA does that a lot on their conference calls. They rattle off 10 names. So that's a very interesting move that Marvell made on Amazon and Broadcom made on Google.
I mean, and again, these moves, it goes to show you, I just want to say, the loved stocks get bought on dips. Marvell is a loved stock. It was bought. I mean, it had the DeepSeek dip. Was that the DeepSeek dip?
Yep.
What was the dip? Like 10 days ago? Is that DeepSeek? DeepSeek Monday? I mean, it went from 125 to $100 in a day. It's got all back. The whole damn thing's back. Gap filled. 10 days later, Joel. 10 days later. All the damage undone. I mean, that's where we're at here. You've got to actually be buying dips on the loved stocks. Don't dare buy the dips on stock like ELF. That's where I'm at here too. If you're hated, and the dip does not even get a sniff. Celsius. How many people have been buying the dip on Celsius the whole damn way down? Hated. How do you know they're hated? Look at the chart, the price action. Stock's making new 52-week lows.
$22.
Celsius. Oh, no, yes, it's coming back. It's going to be 90 again. The story went ice cold and the valuation was nosebleed. That is the worst possible combination for you when that happens. Again, people are comparing Palantir. Why is Palantir not Celsius? Why? Why? You know why? Because it's still making new all-time highs. This story is hot. So hot.
Smoked on that one.
Smoking hot. Don't short the stocks that are smoking hot.
Can we change our ETFs weekly? Our acronyms weekly.
All right, hey, there's some breaking news. Elliott emerges as Aspen Tech investor with over 9% stake. So that just hit the tape. Aspen Technologies. I think that's
symbol me.
Yeah, we're hurried.
AZPN, I think AZPN, right?
AZPN. Not a stock I trade at all. But
I'm not going to get it right.
Is that got a takeover on the table? Aspen? Look at the chart. Aspen.
Yeah, it hung out at 250 forever.
That's why I'm kind of quickly looking here. Yeah, they're getting acquired by Emerson Electric. So EMR is acquiring them. So, I mean, I don't know what that means. That
means Elliott wants a higher price.
They want a higher price. So, so that's why it's pumping up here a little bit. But then people are hetsant because there's already a deal on the table, 265. So if you're looking, why is it only up 0.81%? Was already a deal there.
265? Nah.
So the 265, the deal's actually lower than this price. So you got to consider that when you're, just buying blindly because Elliott's, and maybe they're going to get a better price. Possible. Could go higher than that, but it's not like this is just, an idea. Elliott typically goes after these stocks that are in the gutter too. This one's not that either.
They do.
So.
Yeah. Just a quick teaching moment here. The reason that Dennis said that is because, first of all, the reaction was muted. But like a lot of times when you have a takeover and you have a deal on the table, the ARBs get in it and it's like going to go through. It's not going to go through. So you see you see a long consolidation period. I don't know if we have any other stocks in play like that, but that's what you have. You just have, nervous ARBs that are, I'm taking this, I'm holding this, I'm buying 250 for sure. It's going to 265. And there's other people like, oh boy, I don't know what's going to happen. And then you have someone like Elliott comes in and totally throws the ARB out of whack. But it looks like it was getting close to close there as it moved up to 265. So we'll see what happens to that. Pop 271.56, already backed off $3. A little bit of doubt about what Elliott's intentions are here.
Back to the conversation, because it was going to be good. Christian was getting into it there too. Just on now I've lost my train of thought. What were we talking about right before?
We were talking about ELF, and we were talking about Palantir.
Yeah, ELF. And hated stocks.
I almost gave ELF a shot, and because it's down a lot, and I started to think about some of the other names that sometimes sometimes there's some breadcrumbs that you can kind of pick up on. The other day it was L'Oreal, which is I believe a European company, and they missed their numbers. They missed some of these European companies, they report monthly sales, and L'Oreal reported weaker. Now I'm not an expert in this space, but I kind of think L'Oreal and ELF kind of go together. And when I heard that they missed sales and I saw that EL went down in sympathy, I'm like, that doesn't bode well. Not that I'm an expert and know the difference between L'Oreal products and ELF products, but sometimes you can get a read where you're like, geez, if they're not doing well, and again, you don't know. It could be that something like L'Oreal is doing wrong, but it could just also be the industry. So I think it's the industry.
I think the industry to a certain extent, but ELF's had all kinds of problems here, and ELF had a nosebleed valuation at one time too. It's not anymore. The nosebleed valuation is gone. The stock actually, is looking 2025 EPS of 3, slight guide down 332, but you're talking 20 times earnings. Still not cheap, but retail stocks, lots of them carry 20 times earnings. Fine, Costco's in 45 forever if the growth is there. The problem is the growth is not there. They're seeing an earnings decline. So, when you cut guidance, you go down no matter what. But, this story has just gone ice cold here, too. Again, I think you got to know the reasons. So ELF, let's just say, let's compare apples and oranges, even though the market at one point in time, go back to the Roblox yesterday. RBLX at one point in time was down 25%. Did Roblox say anything really to warrant the stock being down 25%? They didn't guide down, maybe slightly light on the revenue there, and that's it. I mean, this is a different story. This ELF is a complete guide down here. 327 versus 332 versus 354 estimates. Like, that's a full guide down for the year of about 8%. Yeah, you could say 25% seems way overdone, but this is what this market does. You guide down, they punish you severely. So, I mean, these gap downs are just not the same. So you can't just blindly buy any stocks that are gapping down. You got to buy the stocks that, one, probably didn't guide down. That's probably rule one. Don't buy the gap downs on the stocks that are guiding down. Amazon actually did guide down sales slightly, so it's a little bit concerning. But if I'm setting rules on which stocks I'm going to buy the dip on, it's one, going to be stocks that are not guiding down. And two, stocks that just made new highs, and maybe it's just a bar thing. And I think Roblox was a little bit, like to Christian's point, the bar was maybe just a little bit too high. Algos way overdid it, obviously, and that's why they got punished. Anyone who sold in the 50s, got punished severely. I didn't sell any shares yesterday, but, it still pissed me off. But, I mean, there's just opportunities on these gap downs, but I think stay away from the stocks that are guiding down, because I don't think the ELF bounces right back. Christian, what are your thoughts on gap trading?
Wait, Dennis, before we go to that, I just want to ask you, I mean, you were definitely, you were upset yesterday.
I'm still upset. I don't think the stock should have down that much.
What's your I mean, and this is why a lot of people tune into the show. And I know you're thinking, what is your forward thinking with this? I mean, you love it. You're holding it. Are you waiting for a gap fill? Do you not care about the fun of? Do you not care about the report? I mean, I'm not asking you, are you going to sell 100 shares today or whatever? Just like you're thinking, how have you, or do you still need a couple more days?
No, I was never selling Roblox. I never once said I was selling the stock. Like people
no. Okay, but now I'm talking about.
I wasn't selling it. I was mad that it went down that much.
Okay. All right. Perfect.
But I was never intending to sell it. I'm sorry if people say, that I'm ticked off that a stock app's down, that they automatically assume I'm selling it.
No. I'm not asking about what you did that day. I'm asking
nothing.
about.
I never traded Roblox yesterday. I did for day trade, but I never traded in the long-term account. I was playing it a little bit, on the day trading side of it, but I never played in the long-term account. I made a little bit on the long side, but I didn't.
Tokyo made $7 off your rant.
Well, that's good. Great job. The people who bought the dip did really well on it yesterday. But just because you're mad at something, like, don't interpret that means, oh, I'm selling it in the hole here. Like, when I'm here, folks, I try to be transparent. When I'm doing long-term trades, Christian as well, we're very good with this. Follow us on Twitter. We tweet out our long-term stuff. Not only that, we talk about our long-term trades. Like I told you on Tesla, I said I was starting to sell Tesla, and I sold it multiple times. I sold it a lot of times, actually, because I have a huge position. That it was huge. At one point in time, Tesla was 50% of my kids' RESP, 50, and it grew into that, because it just went up so much. But I started with a huge position, and then it doubled, so it got really big. So I've trimmed it up, and you know why I trimmed it up? Because I'm worried about Musk is saying next. I don't like the numbers coming out. More bad numbers from Tesla today. You got China numbers that were weak as well. People are saying, well, it's seasonal. Well, year over year is not seasonal, folks. That's year over year numbers, minus 11%. That's not a seasonal thing. That was last year too. They're comparing right at the same time frame. Year over year numbers are not seasonal. Write that down. So, I mean, the numbers are not great. Do I think Tesla eventually ramps up again with the humanoid stuff? Yeah, I think there's a long-term bullish thesis here, but I can't quantify how much damage Musk has done to the brand by having one-sided politics. It's the reason. I'm not saying I disagree or agree with what Musk is saying.
One-sided politics.
But it's one-sided politics. There's no CEO that does that. Nobody does that. You know why they don't do that? Because they can't cut off half their customer base. So no CEO has one side. Most CEOs don't talk politics at all, because they know they can't piss off the Republicans or piss off the Dems, because they need everybody to buy cars. So, I mean, that's the issue. I don't know how much damage he's done with the one-sided politics. I don't know. I can't quantify that. So I'm not out, but I brought it down to a normal size position because I don't know how much damage is there. Get new information, stop seeing, sales numbers massively decline. That changes the story. So when you get new information, you have to adjust your thinking. Christian, I know I've been ranting here forever, so I really want to get your thoughts on some of this stuff here too.
What was the question?
You could go anywhere.
I'm sorry. Just kidding.
Yeah, you can go anywhere, Christian.
Hey, let's talk about, we've got jobs coming up in 5 minutes.
Yes, yes.
5 minutes. I'm just going to give you a little bit of a preview. Sorry, I'm just typing something out. But let's talk about jobs, because the market has been moving pretty decently on these numbers. And I did the implied move yesterday for this. And, the market, for whatever reason, is really in tune to these moves. I think it's something like about 1% that the S&P is implying. And it's implying even a bigger move for here it is, 85 basis points for SPY is what the market is looking for a move today. And then IWM, which loves to move on economic data, is implying that a 1.5% move, 1.45%. So if this number comes out different than expected, and what they're looking for is change in non-farm payrolls is 175,000, which is very similar to what they were looking for last month, and the number came in hot last time at 256. So there's a lot of economists out there that I was listening to this morning saying, watch the revisions, because people think that the number is going to be revised down. We'll see. I don't think that. I don't know, because I don't analyze these numbers, but so watch the revisions. But they're looking for 175 for non-farm payrolls, and they're looking for 158 for private payrolls. So those are the numbers. And then the other number that I tend to look at too is what the average hourly earnings month over month rate is, because that's another little gauge of inflation. They're looking for 0.3%. So we've got that coming up in about 4 minutes. Guys, do you think we're going to get a big move off of this number, or you think it's going to be quiet?
It's hard to say. Sometimes you can have some violent moves off these numbers. Like if you were ranking them, obviously the CPI is the most important number, and you get any inflation data. But this is up there, man. Like this is maybe, like, would you say number 2, Joel, on potential market and economic data
it
points?
shifts. It shifts.
It does shift.
It does shift.
It's
but
important,
right now,
though, for sure, Christian.
Right now, and also, Christian, revisions. Like it's been revisions Hanover with these jobs numbers. So I mean, very hard, because it could be, if they've just been way off. Am I correct on that? I mean, some of these revisions have just been mind blowing. So, but we got Mish coming on at 8:35. We'll talk about it with her. I just want to preview at 9 a.m. Blue reached out of the blue to me yesterday, and he sees a lot of signs, or some indications that things may be slowing down. The R word. He used the R word, folks. The R word. Recession. And he talked about those factors. The jobs report, we'll see how that is. Of course, it takes months of data in order to come to those kind of conclusions. But there are, 3 main factors going on that could be sending us towards that R word. But what do we got? I think if it's in line, we won't move. If it jumps, well, they could hit it, but then they'll rally it because interest rates are going down. So, I mean, right?
And it's important to realize that the good news, it will be interpreted as bad news for the market.
Okay.
So,
all right.
So you get a better than expected private payrolls number, and what's going to happen? Rates are going to go higher, and the market's going to sell off a little bit. You get a number in line, or a little bit better, lighter, or if they revise that previous number down, the market's going to most likely kick back up a bit. So it's going to be an interesting report. And again,
it's going to be wild. I think. Yeah. I think it's not going to be a nothing burger, but I might be wrong. I'm calling no nothing burger. I actually think you're going to get a lot of chop here.
Well, yesterday was choppy. I mean, the overall market was choppy too, almost like waiting for this number. So
yeah,
I think we could move too.
Okay, got a quick technical setup here. We got about 30 seconds. Yesterday's high, 0850. Pre-market high, 0950. So algos will go wild to the upside if we take that out. Friday, this is just deja vu all over again. This was last Friday. We had the same. We dipped on Monday. We came all the way back. We made a new high on Friday, and then we completely fell apart. On the downside, pre-market low, that's only 16 handles away. That's not much. Yesterday's low is 60.70. So I got an identifiable level on the upside. Let's see if they take it through that potential double top, or they want to test yesterday's low. The algos have the number. Oh, it's a good number. It's a good number.
It is change in private payrolls 143 versus 175 expected.
That's a bad number.
Change in private payrolls 111 versus 158. So this is light. Average hourly earnings does jump though, 0.5 versus 0.3. So that's a kick up there.
Chop suey here, man. We ripped up on IWM. We ripped up a buck right on the print, and we just tanked it back. Holy, this is the year of fade, man. I got that part right. I didn't get everything right, but I tell you, I got this fade trade right here so far.
So what's the TLT doing here? Our lie detector indicator that popped and that dropped too, right? So let's get the S&P. So Christian, what are the implications for rates?
Let's see. Sorry, I'm just.
That's okay.
Yeah, it looks like rates are. I don't think they like that number. Let's see what the revisions were. I don't have the the revisions were bumped up. Let's see, 307 versus 256. So that's not particularly so hot. So that might be why you've got that initial reaction going on.
Chop. They don't know what to do with it. The algos don't know what to do with it. They're chopping all around here. Chop suey.
The dollar's moving up. I don't think that to my point about the average hourly earnings, that's a big jump. That's 0.5 versus 0.3. And again, I'm waiting to see what the rest of the revisions are going to be. There we go. Yeah, they revised the previous month up. So that's also, I think, what's going on here.
So what did they like off the hop to spark the round? Like the TLT got over 90.50 and the S&P's made a new high for the move. There's something they like. I mean, the hourly ratings, they definitely, the wages, they definitely didn't like, right? That's probably what was the biggest catalyst on the downside.
Correct. Yes.
Okay.
0.5 versus 0.3. I have more of the revisions if you want them. Let's see. Sorry, I'm just a little bit slow this morning. They revised the previous month was the actual number last month was 256 for non-farm payrolls, and they revised it up to 307. They also revised up the change in private payrolls from 223 to 273. So that's why the market, you got two reasons why the market's not liking this data. One is the average hourly earnings. The other is that the revisions are higher.
Okay. All right. Well, we got the high for the weekend here at 61.1475. And not even going to talk about the low of the week. The low of the week is, man, I can't even remember on Monday. That was the, what was that? Was that the tariff tantrum? Yeah, right? Yep. So there you go. You know what? We got Mish lurking in the background there. Mitch, why don't you, or not Mitch, I'm sorry. Brent, go ahead. Why don't you help us out with our guest?
All right, here we go. Good morning, Mish. Mish Schneider, Chief Strategist at MarketGauge.com. How is your morning going so far?
Well, so far, the best part of my morning is starting it with you guys. Really.
Aw, that is so nice.
I just wanted to point out something. Can you see behind me my lady back there?
Hold on, let me take the banner down. I don't think I think she's just out of camera. There she is. Yeah.
So notice what she's wearing.
Let's see. Hold on. Let's make you bigger.
You got to give
here.
main screen. There you go.
Is that a
Kansas City Chiefs Super Bowl T-shirt from last Super Bowl? And I wanted to tell you guys that I really rooted for the Lions, and so she would have been wearing a Lions T-shirt, but instead, of course, I know being controversial, I'm going to go for the Chiefs again in terms of rooting for them.
Why?
Sorry.
But no, I mean, you're not from Kansas City.
No, I'm from New York, but you know.
Because she doesn't want the Eagles to win, right?
I know why. I know why she wants
Eagles
Kansas
is bad
City
for the market.
Well, two things. Number one is, even though the Kansas City Chiefs have blown away the last couple of years. They're still always unfavored. I mean, it's amazing. Even now, everybody thinks the Eagles are going to win. And I'm like, why? I mean, what about this team? Do people not like? I mean, my God, Mahomes is much, I think, better than Hurts. And yeah, you've got Barkley and Brown on the Eagles, but you also have a great defense team on the Kansas City Chiefs, so it's going to be a great game.
I hope you're right, Mish.
I like that you started with the sport talk. We didn't even need to talk about the jobs data right away. Let's just get the Super Bowl out of the way. I like it, Mitch.
Well, we had to digest a little bit here what's going
That's
on.
True.
And I mean, and the thing that I really love being on this show is that I'm a trader and you guys are traders, and it's refreshing to speak with you because people have a lot of theory. And Dennis, I know, because I follow you so much on X. We all know that price rules this year. Price rules. This is been my expression. Price rules, fundamentals drool, because the price is going to dictate the narrative. So if you're going to talk about stagflation, recession, inflation, economic growth, blah blah blah, even the earnings, it's always going to be about the price. And I think that's why this has been such a fade market kind of trading platform. So that's kind of where I wanted to start the conversation, because what we're learning today right now is that in certain areas, price is definitely ruling the narrative. And in other areas, price is certainly ruling the narrative. And the narrative is sort of shifting because nobody really knows. That's the bottom line.
I mean, nobody knows. That is the bottom line. And I mean, in this market, there's so many mixed signals. I mean, we keep getting, even from the Magnificent Seven, it was mixed earnings. We had a couple good ones, a couple bad ones. Every day, it seems like some companies getting beat, some companies, getting, rallying hard. Today, it's Bill.com down 30% and they're going the other way. I don't even remember who was going the other way now. Doximity was up 21%. So, I mean, there's always, big moves in both directions here. I think it's very confusing for, everyone, not just the retail investor, but I think probably the institutional investor is somewhat confused too. I mean, even watching CNBC, somebody's bullish, somebody's bearish, somebody's like, oh, the market's too high price, but, Palantir is going to continue. Dan Ives gets up there and, Palantir is going to 300. Dan Nathan's up there, the other Dan, and say it's going to 0. I mean, it's so confusing, and maybe that's contributing to the chop is just everybody's opinion. But Mish, how do you navigate these, choppy markets?
Well, a couple of things. Number one is I remember using this word specifically the last time I was with you guys, which was in December. I said regardless. Remember, I said there were certain things I was going to look at because I felt like regardless of the narrative or regardless of the price action, they would do well because they were having their own trends. And one, of course, was my vanity trade, right? So the whole idea of the diet drug. So far, Novo Nordisk, they had a beautiful bottom, and then it came down just enough to give another buy opportunity. And now I see here pre-market, it's up again. The same thing with AbbVie. AbbVie gapped up after earnings and really basically is just going higher. And so in terms of my themes, that was one, and that's what I've been focusing on. And I think I sent you in notes, Joel, that I was looking now at Match.com. It did not report well, but who cares? Because we're looking forward, right? So I think that we could see as a result that domino effect of people feeling better about themselves, maybe becoming more social and going out and dating more. And there's a couple of other stocks in there, but that was one theme. The other theme was EVs, but not Tesla. I was really focused on Rivian. So Rivian's been a little bit of a heartbreaker here, but yet it refuses to really go down. It gets under 12, pops right back up. So I think that's another one. So what I'm really trying to say is we can go through the themes, of course, and then Modern Family. But my other theme was gold and silver, and my God, that has certainly paid off. And food commodities like corn, for example, which has paid off. So I think that if I just sticking to my themes like I've done. Oh, IBM was another one on my top 10 list. Got into that. That's done really well. Gapped up after earnings and basically is just in consolidation phase. So number one is stay focused. You don't have to look all over the board. The fear of missing out this year is terrible for people, right? As you have mentioned, Dennis, over and over about the fade trade. And number two is, if you don't want to focus on tech, there's other things to look at. Some of the emerging markets. China was another one of my themes. BABA was a top pick in the top 10. So, I mean, and then looking at the crypto space, I had a Ripple, which I know I get some flack on, but meanwhile, it went from 220 up to like 340, and now it's back down at around 240. I think if you just focus on that and then follow the price. And this is
Mish, not all the vanity trades working out.
Well, ELF, but ELF was not on my list this year. But ELF, look at that. I mean, my thing, that just got murdered. But, it was already declining. So why would you get into that? But if you look at it, besides the two diet drugs that I just mentioned, let's look at something like IPAR, which I've talked about on media. It's a perfume company. It's not at new all-time highs, but it's darn close. That would be one that I would keep my eye on. So I think that Hims was another one. It literally went from 25 up to about 42. It's come off a little bit here. And now Eli Lilly had some good news. So that's starting to do a little bit better. So Ulta never really took out where I wanted it to go. It was on my list, but it didn't get through 415 recently. So I'm just like watching it. So I think that's really it, is you have a theme, pick your stocks, watch your charts, follow the breakouts, don't be too late to the party, and then take your profits if you get a nice move and trail up your stops. It's a trader's paradise.
Hey, Mish, just a question for you. Well, two questions for you, but number one, do you consider yourself a contrarian trader? Because I look at your feed, Market Minute is your Twitter handle, and I always find some good ideas or some things that, and I liked how you're phrasing it too, where you hone in on themes that might be really good for the market, and then you kind of dig into those names. But I love when I go through your feed that I can find stocks that are just a little bit different and a little bit off my radar. And it's great for when I go through your feed for idea generation, because I always find something that's a little bit different. So number one, do you kind of consider yourself a contrarian trader with some of your picks? And my second question is, because one of those picks that I see is kind of contrarian too, is Fastly, FSLY. And that's kind of the sister to Cloudflare, right? That had good earnings. So that might be a good stock to watch today.
Right. Well, let's define contrarian, because there are contrarians who just like to look at beat up stocks and they don't care about anything other than oversold conditions and mean reversion trading. And that's, a legitimate way to trade. My contrarian nature comes more from the theme base. So, for example, let's take ARK. Like last year, ARK had gotten so beat up, and I started to talk about it over 40. It was like, well, it's taking out 40. It looks good. And now it's trading at 62. I mean, I'm not even in it because of other reasons. But nonetheless, I started to look at what she was looking at, and I liked some of her picks. I thought she was shifting her focus. The same thing with
the... She did shift the focus, too, because you look at the holdings in ARK. It's a lot different because there was a lot of what we may call pieces of junk that were in there. But the holdings, I looked at the holdings the other day of the ARK ETF.
Whoa.
And I was surprised that she actually has a lot of names that are doing quite well.
Absolutely. I mean, she took a little hit. I know Roblox was one of her holdings, but yeah, I mean, exactly. And she's very bullish in crypto. And, so far, even though we've had some volatility, that still looks like a good thing to be. So what I'm saying is that be a contrarian, but you have to have two things. You have to have a story. So I like a story. So like, for example, talk about contrarian, Match.com is perfect. And after it reported, I wouldn't touch it before. Now I'm looking for it to clear 35. And if it clears 35, maybe I wouldn't buy it on a Friday because we've had such bad Monday morning openings in the last couple of weeks. But certainly Monday, if it holds up, I would buy it. Is that a contrarian trade? Well, yes and no. It is technically because it's been beat up, but it really fits so much in my theme. And then, of course, after that, it's risk management. But what I really wanted to get to was the idea of inflation, because, my inflation trifecta has saved my butt from getting too bullish in anything that had to do with inflation and getting definitely avoiding the conversation of, yeah, we're definitely going into stagflation, because again, I have to follow my own rule. Price will dictate narrative. So the dollar, that would be one. Well, the dollar is still relatively strong, so that's not really giving it to me. Silver to gold ratio, silver's still underperforming gold, so that's not giving it to me. And sugar is the really, right now, the thing that I'm watching. You know, I look at that as a barometer because of the fact that it's a food staple in just about everything. It's a comfort food people turn to in times of stress. And right now that's at the precipice, but not quite there yet in terms of taking out like 20 cents a pound. So I'm only mentioning that, A, because it's something good to really look at for people who want to see where we're going with inflation. And number two is, it goes back to the proof of, am I being a contrarian, or am I looking at indicators and will not move on it until I get the confirmation of it?
Awesome. Thank you very much. Yeah. So sugar, is there a stock play off of sugar, or are you just playing the commodity?
Well, cane, but I don't like that ETF, but it is reliable enough. Let's put it that way. That is, in terms of liquidity, the most liquid of the ETFs related to sugar. There's a couple of others out there. Yeah, it's futures market that I'm really following, and I don't even really have to trade it. That's the great thing about this, Chris, is that I can just look at it as an indicator to what I should be looking at. So if that is going to go up, then I know to buy more silver. Now, SLV is a very reliable, or PSLV, some people prefer. Gold, GLD is very reliable. Let's look even at copper, which has been interestingly strong. And now I see things like aluminum are getting stronger. Like I said, corn made a big move. So I'll look at it more that way. And then I'll look at commodity-rich countries to see what might be developing as a result. Brazil, Latin America, and so on.
So, for example, like the one old relationship that I know with copper is, when copper's going up, it's usually like emerging markets are pretty, like that should be perking up too. Is there anything that you like in that space right now in terms of stocks or ETFs?
A couple. Number one is EWZ had a nice breakout. Obviously, again, this sort of Friday trading to me sometimes is a bit scary so far this year, but EWZ right now has done well. I mean, DAX. I mean, people were so negative about Germany, and they have good reasons to be economically, but yet their stock is on new highs. I wouldn't buy it now. And then also the other one I really like right now, I'm interested in, is EZA, which is South Africa. Why would I be interested in South Africa? Well, if gold miners have taken a pop, that's a big mining country. And then finally, I'm still into Vietnam. It's taking its sweet time, but there's been some good news about Vietnam. I read today that they are looking about building a nuclear reactor. They're trying to keep up with the times. They're industrious. So far, they haven't been mentioned in the tariff situation. So,
how do you follow that? What is there any?
There is VNM.
ZM, boy.
V as in Victor.
Victor, Nancy, Michael.
Who? Oh, Victor, Nancy, Michael. Boy, this is a new symbol Friday. Ooh, that looks like it's. It looks like that's knocking on the door as well. Christian mentioned, but I'll steal it from him. Sunday scaries. I mean, what about the last two Sundays here? And I heard you just mention, Freaky Friday, and so like, are you at the point where you're, putting some hedges on over the weekend, or you just have a balanced portfolio, or you just wait to buy the dip on Monday morning in the futures?
Well, actually, last Sunday, I found myself trading overnight in my Coinbase wallet. I was buying the extreme dip in a lot of the cryptocurrencies, and then got out, when they made a bit of a rally. And so I still have a sort of a core position. That's the only thing I really want to trade overnight. I'm not going to go in and start trading, the E-minis or anything like that. That's not what I'm going to do, because I'll be up all night. But yeah, I think basically, like I said, I've stuck to my themes. And so even though it's been kind of scary, like last Monday, let's take that for an example, the stocks that I were in were okay. AbbVie, IBM, Stratasys, we talked about this last time, guys. This is the 3D printing that made the deal with NASCAR. That thing has been like sweet, you know. And again, is that a contrarian play, or was that based on, you know what, logic dictates that if a company makes an exclusive deal for 3D printing for NASCAR, that's got to be pretty damn good. So guess what happens, right? They report earnings. Of course, their guidance going forward is amazing, as it should be. Then gaps up. It went literally from 9, it was trading around 9 to up to, I think it topped out yesterday at around 1285 so far. So I'm just picking very carefully, and then I'm pricing in some of the volatility, and then I'm taking those dips as a buy opportunity for things that I haven't bought yet, or at least waiting for some confirmation, like Ulta, like I mentioned before. I have not gotten into that yet because it hasn't proven to me yet that I should.
Okay. Any other under the radar stock picks?
Let me put my glasses on for a moment.
Okay.
Oh yes, let's talk about QUBT. Okay, so quantum computing, right, was so hot. And it was one of the reasons why I liked IBM, by the way, because people were saying they're not into quantum computing, but they kind of were, right? So old school. So QUBT has been beat up. It's another one. But right now, it's sitting in a really interesting spot, and it keeps holding at around 950. So if it gets up another $1, 10.50, to me, that's a signal with a low risk that I would definitely buy. Maybe even sooner than that. It depends. So far, the two-day lows have been like 940. Maybe if we start getting back and have like a 30-minute OR opening range breakout, that kind of thing. Let's see what else.
The old opening range breakout trick, huh?
Oh, yeah. Let's see. I'm just putting on my glass. Well, Chewy, I talked about too. That thing is done really, really well. I mean, so let's talk about Fastly, right? It has to make a breakout. It hasn't. It has to at least show something to me. It has to get through 11. So it had a good earnings, but now it's struggling a little bit here. So that's another one that is on my radar. But this is the year of being uber patient. I mean, if you're uber patient, it'll pay off. If I start to think commodities are picking up, then I may start looking at some of the other instruments that are typical in a strong uptick for commodities. I haven't touched energy really at all, or oil. And then of course I have to watch my Modern Family. So right now with IWM, I just can't seem to get through that 230.
I know that 230 level is huge. All right, Mish, great. We covered a lot of stocks here. We're bumping up against the clock here, but as always, we love having you on after some interesting jobs data. We got a lot of stocks to put on our radar. Mish Schneider, MarketGauge, Market Minute, or Market Long Term. She covers everything for everybody. So thank you very much, Mish, and we'll talk to you again next month.
Have a wonderful day.
Thanks, Mish.
Thank you.
Okay, I want to go to an earnings report. Did someone on this show, one of these hosts of the show, talked about a potential call spread? And you know where I'm going, Christian. Affirm.
Affirmative. Yes,
affirmative. You're full
listen, it's Friday. I'll give you.
I like
You're
it.
ready today, Christian. You just get cranked up by Friday.
I do. Come on, it's the weekend, and no Sunday scaries.
Super Bowl weekend.
How could you have Sunday scaries with the Super Bowl? Let's go. Come on.
Any given Sunday.
I think that will be very good if everybody kind of says, if they get more focused on the Super Bowl rather than the last 2 Sundays going into Monday. But that's just my opinion. How come I can't see your screen? Here,
I don't know here.
Right. All right.
There we go.
So, yeah. So my thought was on Affirm that, again, just taking note of what some of the other names did in the group that I've already reported. MasterCard had great numbers. Visa had great numbers. Nice. AXP had good numbers. They didn't have a great reaction, but I just kind of looked at Affirm, and again, I'm more enticed to kind of go after a name when it hasn't done much. And I have been in Affirm previously, And I kind of just, once it kind of just lost its upside momentum, hence that blue line that you've got on the top right chart there, that it broke that 50-day moving average. I got out of Affirm because I thought that it lost that upside momentum. But an earnings report can always kind of change things. So yes, I did go long, and I hope it doesn't get smacked down here. Actually, can I show my screen really quick?
Did you go long into the earnings or after the earnings, Christian?
Into the earnings.
Oh, you went long into the earnings. How did you do that again?
Call spread.
But go into it, like, because I think they really like this. Actually, when you start talking options, a lot of the traders really like the details. So we have some very good options traders in the chat. So if you can explain the exact trade you took, that'd be awesome.
Please.
Yep. So I was looking at the possibility of this thing getting going, and based on my indicator, looking at volume at price, 69.83 is where we've got some overhead resistance. So that's what I was looking. And then what I also do when I look at earnings is I look to see what the market makers are implying. Forgetting what the exact implied move was, but it was somewhere around like this range. So that also gives me a sense of whether what I'm looking at, if it measures up with my technicals as well, which it did perfectly. So I took a shot at this, and I did the I'm in the Affirm. So that's how I chose my strike, 64.69. So I was looking for a move up to $69. Now, if you look to see where it's trading, notice it goes right up to that overhead supply and is just sitting around there, 69.70. So it's got to get through that level where you've got potential sellers up there who are kind of trapped in the stock a little bit. So number one, like hopefully, if this name can kind of hang in there above 68, I should have a nice winner. And I just went out to just a $5 wide call spread, so 64 to 69.
How far out did you go in the options, Christian?
So for today,
please.
No,
today you said.
Yeah, just for
today. Okay,
options.
Yeah, right. Okay, right.
And it was a $5 wide call spread, and I paid $1.70 for that.
Nice.
So if I could get a double out of this off of the open, I'll try to get that, and then we'll see where it kind of sets up for the day. Now, if you're not in the stock and you're like, hey, I want to get involved in this, I would make sure that it clears this overhead supply, and that would be right around like 70, $71. If you're looking for a play, besides if you're not in it for right now, that's basically what I would be watching.
Okay, we got a 9 o'clock guest coming on here, so we're going to start our wrap up here at 8:57 and change. They bought the dip. They
sold the rip. They bought the dip. Then they sold the rip again. Then they bought the dip again. And they is me as well, because I've been doing the same thing. So some of this is just play the chop. We just rip up 7-8 handles, sell some stocks. We just sell off 7-8 handles, buy some stocks. It's what I'm just doing in the background.
Sorry, I was just going to say one more thing. Watch what Bitcoin's doing. This gave me a nice, sometimes if you look at what Bitcoin is doing, it'll give you a nice sense of like the risk appetite for the day. And Bitcoin is now up 2% right now. So it just took out the highs of the pre-market session about 10, 15 minutes ago. And it's interesting that is starting to go up before the equities move.
We've also got MSTR, MicroStrategy, which renamed themselves Strategy. So we have to call it Strategy now. I don't have it in front of me. KBW, I think. Somebody started as a buy. I think it was KBW.
Okay.
So just keep that in mind if you're trading it today. A little bit outsized performance. It's up $7 here right now. I know Bitcoin's ripping higher here too, but MSTR is really ripping higher. They actually did get a buy rating as well. 500 and huge price target was like 540 or something. Huge.
That is a big price. Oh well, Dennis, it was already at 543. Does that mean it hit its all-time high, or does it mean it's going back there?
I mean, it's going back there. They're putting it on there today, and they think it can get back there. So it was definitely bubblicious there for a little while. And that's the one thing. And we can talk Palantir, MSTR. When these stocks go parabolic, people want to naturally short what is the strongest, and I don't do that because you don't know. Like MSTR looked at we went parabolic at 400, and then it went to almost 600. So you never know where these things top out. The trade is usually on the short side after they have the washout day, where you have up, and then boom, you have the washout day, and then the buyers try to come emerge, but they can't get back there. That's a better time. Like kick them when they're down. So I mean, everybody wants to be a hero and call the top in Palantir. Obviously not been the case. I mean, Dan Nathan's been trying to call the top on that thing for 3 months or 4 months straight here, Christian. it's still going up every single day. Trying to be a hero usually doesn't help. Doesn't help your P&L.
The market could stay irrational for longer than you could go shorting and trying to get in front of these. And I get it. This is something that I learned a long time ago in my trading career. Dennis made a great point about this, but you never get in front of these freight trains, because once momentum sets in, right, and people, and I get it, like I saw some comments in the chat where people are like, this doesn't make sense and so forth, but we see this from time to time, just as the point with MSTR. We see these stories go on, and they don't usually just go on for a couple days. Sometimes they play out for a couple weeks before that momentum dies down. And, options are a portion of this too. People start buying calls, and it creates a gamma effect. And the more that the stock goes up, more that the market makers, not doing anything disingenuous, but they literally have to go out and buy more stock because of the gamma move. And the more options that are positioned in something like this, the more that the market makers have to go out and purchase stock to hedge themselves. So it's a very important concept.
Guess who the guest is on Monday?
All these guessing games. Let's do these guessing games.
Because we played this obvious.
Kid. I'm tangent city here now.
Monday, Dennis. Monday. Monday. Monday.
Chad'll know. I'm too stupid to figure stuff like this out. I suck at guessing games.
I
play that guess who with my kids, and I'd always lose.
I'll give you my kids and my wife hate when I do this. I'll give you 3 choices.
Oh my gosh, this is.
Is it Mickey Mantle?
Tim Quast.
Okay. All right.
The chat, as soon as I saw it, I was all over it. We love our Tim Quast. We love our market structure Monday.
Bye, Dennis.
Tim has been coming on this show for like 5 years. He's awesome.
Bye, Dennis.
Kicking me out? I'm gone?
Yes.
Okay.
Bye, Dennis.
Kicking me out. Okay. Bye.
Christian, Christian, you were great today, man. I really appreciate all those insights you gave and everything. You ride hot, man. Just stay focused today and finish out the week strong, because who the know what the hell is going to happen on Monday.
Thanks so much, guys. Have a great weekend, and go refs for Sunday.
But stay. Like, we're not wrapping up the show here, Joel. You sound like you're wrapping up the show.
We got Blue coming on.
I know. So don't sound like you're wrapping up the show. You kicked me off. I want to talk to Blue. I'm not allowed to talk to Blue.
All right, here we go. Here we go, Dennis. Here we go. Okay, Blue Putnam. There he is.
Hey, good morning.
Kick me off without saying hi to my boy Blue. I love my boy Blue. How are you? He knows I got to go trade. I always leave at 9, but I was like, I got to stay on for a couple minutes with Blue here. Blue, holy. I mean, it's been, an interesting month here. What are your thoughts? And I mean, before we start getting into economic data, and we can talk to jobs here in a second, which we want to do, just overall thoughts on, the first, couple weeks, with Trump and the tariffs, and, what are your thoughts here? With the tariffs are coming, we're putting them on today. Now we're not putting them on. Now we're kicking the can down the road 30 days. I mean, I'm all over the place too, trying to figure out how to trade this. What are your thoughts as an economist when you're seeing, this indirection really is what it is from Trump? It's all over the place.
Well, it is all over the place, but you got to realize that the people in Washington understand what you care about. So you got to have guacamole for the Super Bowl, okay? So you need avocado. So you can't do anything with Mexico for at least 30 days. And then Valentine's Day is coming up. I don't know if you know it, but virtually every roses that you're going to buy for your special one are coming from Colombia. So you can't do anything with them for 30 days. So, you really got to pay attention to the things that Washington pays attention to, and they care about if you're going to be disadvantaged. And so, yes, they're all over the map because they're trying to do things quickly. Yes. And quickly means they're going to shock the system. And anytime you shock the system, there are going to be unintended, unfortunately, negative consequences. But, they walk them back, and we'll just see where we go.
So it's the geographical seasonal trade?
No, Washington, the Trump administration is going to do what it's aiming to do, but it's just fits and starts.
All right, Dennis really did a great intro of what your topic is for today, and I know Blue emailed me out of the blue, and he was like, I got a hunch. I got a theory. It's not 100%. We know economists. I mean, you can't be 100% on anything, right? But
Never.
you have a theory here, and it really coincides with a lot of things that you just said. So, recession. Who's talking about a recession, Blue?
Well, not many people are because if you say the R word too loudly, you're going to get some pushback. But the reality is that when you shock the economy, and we're doing that with tariffs, we're doing that with immigration, we're doing that with layoff federal workers, we're doing that with suspending grants and programs. So when you give a shock, you're going to have transitional effects. Even if you like where you're going, there might be some short-run pain. And I think we've done enough already, so I don't need to see any more that we're going to see some short-run pain. And it's going to show up in the data very, very soon. The first data that you're going to see it in is the weekly continuing unemployment insurance claims. Because there are going to be a lot of new people looking for jobs, and they're not going to get them. And so the insurance claims, the continuing claims are the ones that are going to be problematic first. And it might take a couple of months to see unemployment rise. That'll come a little later. But I think we're in a weakening phase here. And, I see it's going to be a recession. We'll see how deep it is. I don't think it's going to be all that deep, but I see it coming.
All right, so give us the economic definition of a recession, and then give us the real, the good, the bad, and the ugly. I mean, I think one thing that from my major studies of economics here, it's a real GDP and annual growth. And 9 recessions over the last 76 years, or 12% of the time. Let's talk about GDP. What are you seeing, and those factors that you just mentioned, how they're going to contribute to slower real GDP growth?
Well, the biggest one is government spending. I don't know if you remember your Economics 101 class, but it's C plus I plus G, consumption plus investment plus government spending. So if we're going to cut government spending, and by the way, laying off federal workers is, that's the direction we're headed. And certainly we have a 6% budget deficit, 6% of GDP. I mean, that's too big. So, anyway, government constraint is going to slow down. But then you're also laying off workers. And it's not just federal workers. It's, if your state had some contract from the federal government and now you have to be laid off even though you weren't a federal worker. But it's not just you. It's your neighbors. It's your family. You're going to cut back. So we're going to see cutbacks in consumption that'll start being evident in February and March. Now, February and March means March and April when the data comes out. We got a little bit of a lag here on the data, which, by the way, we'll come back to this, but the Fed's data dependent, so they're at least a month behind, if not more, on anything. Because their crystal ball is as cloudy as mine and yours. But, the transitional effects and the tariff effects coupled with the immigrant deportations, that's going to raise food prices for sure, and probably energy prices, and it's going to make it really hard to build a new house. We get timber and all these things from Canada. So we're looking at short-term inflation impulses. Now, these are not long-term impulses. There's nothing about the whole set of policies that is long-term demand stimulus, but it's a shock that will cause short-term inflation effects. Man, this puts the Fed in a hard place because, they're going to get some weakening data in the employment side and in the economy, and then they're going to see sticky inflation, and then they're not going to know what to do.
Blue, let's talk about the trade war. And you made an interesting point here, is that what other countries will do is they'll just send their stuff somewhere else. Like it might not hurt them as much. It may hurt us, but Canada, I already read they're sending more oil to China, Mexico. Talk about trade wars and the substitution effect.
Okay, so trade wars are really hard to analyze. If you analyze, like, say, a U.S. Canada tariff, and you just think about U.S. and Canada, you're going to get it all wrong, because all of the global supply chains are so interrelated. Like if you make a car, you're going to get some auto parts from Mexico, you're going to get some from Canada, you're going to assemble it somewhere else, probably in the U.S. eventually. It's a mess. And it's a mess because that was the cheapest way to do it, and now it's not the cheapest way. And then you have the retaliation. Back in 2018, when the U.S. first started raising tariffs on China, they said, well, we're just not going to buy your soybeans. So the big loser was soybean farmers in the Midwest, but the big winner was Brazil. There are all these third-party effects. And that's why it's so hard to analyze what's going on. But one of my main messages to my clients is none of this bilateral analysis. That's just not going to work. You've got to think about what's going on globally, and then you have to think about how the other things affect it. So it's really a very difficult analysis, but it all suggests that global supply chains are being disrupted. That disrupts global trade, and so global growth slows down a little bit. It's a constraint on global growth.
So if I'm reading you correctly, there's for the major recessions that we've had, that's over the last 40, 50 years, or you going back and farther, there's always been a catalyst, right?
Mm-hmm.
A cause, right? It was OPEC, it was inflation, it was the housing crisis. So what you're saying is that this triple whammy of the trade war, labor market disruption, combined with budget spending cuts, and at this time, untamed inflation is the recipe for a recession in 2025.
Yeah, that's exactly right. I mean, I will say the majority of my peer group, that is economists, they data mine. And, so rising interest rates, oh, that's bad. Inverted yield curves, oh, that's bad. But I always look behind it. I got to find out what really happened. And of course, you just made the list. Everything is different every time. And this time we have a confluence of policy shocks. By the way, I don't think this recession is going to be particularly deep. The deep recessions that we've had in the past are all due to financial system implosions. Okay? The subprime crisis and the Great Recession, the S&L crisis of the 90s, stuff like that. That's the financial system is in really good shape right now. So this is going to be more mild, like what happened in 1999, 2000, 2001. That was the tech wreck and 9/11. That was a pretty mild recession. By the way, in that recession, we never even had a year of negative GDP. We never even had more than one quarter. But the NBER, the National Bureau of Economic Research, decided it was a recession. I forgot to define recessions for you, but for me, you got to have GDP going down for about a year.
Okay. All right. So, being on this show for a long time, we like to look at charts, right? And we like to look at, I hope I have that up there, the Consumer Price Index. Now, if I'm looking at this chart, I don't know if I like what I see here. I see us peaking out here at 9%. I see a drop. I see a consolidation. I see another drop. And now, man, do I see a bottom there? And do I see an uptick here? Maybe a 50% retracement back to 6%? Oh, my gosh.
No, you don't see that.
Okay. I'm sorry I said that.
This is not a stock. You're not going to do the 50% retracement rule. However, what you do see is starting in the second half of 2023, we just stagnated. We're just bouncing around 3%. We're a little higher, we're a little lower, we're back up. And by the way, this is the Consumer Price Index. So the The Fed looks at the core PCE, but it's not that different. It's stagnated too. And so, and then if you add the tariff war to this, by the way, when you have a tariff war, I love this analogy. When you're in an eye for an eye situation and tit for tat and everybody's like fighting back with each other, eye for an eye means you're going to get blindsided. There's a lot of blind people when you have an eye for an eye. And so you really got to step back and look at this thing. And we're not going to get down to 2% inflation unless something bad happens to the economy. And that's not what I'm forecasting. I'm forecasting a mild recession. So the Fed's really stuck. They got, on the one hand, they got inflation 1% above their target. And on the other hand, if I have any credibility, maybe they're going to get a little nervous about the employment situation. Certainly not today. Today's numbers were strong, but today's numbers were, their history. It's before January 20th.
Okay, let's just get to the bottom line here, and not asking for hot stock picks or we have different kind of investors here. I can attest to that. We have our short-term traders, our swing-term traders, long-term investors. And then you have old guys like us, that have been in the markets for a few years and stuff. What we have found is that slow and steady wins the course here, right? I mean, the market historically, the returns, we know where they've been. Interest rates, I don't think are going lower. I don't think they're going higher. I think they're being steady. Just very, very broad, long-term, let's say 5 to 10 outlook for the markets.
5 to 10 minutes or 5 to 10 years? What are you doing here, Joel?
Everyone cares about 5 to 10 seconds, and we know you're not going to do 5 to 10 minutes. Just talk about, let's make it shorter, 2025.
Okay, 2025, I'm a pretty nervous investor on equities. I think they're just going to bounce around and not go anywhere. So if you're a short-term trader, you're going to have all kind of opportunities to trade the dips, but I would not be nearly as aggressive as the last couple of years. The Fed is not behind you, and the government policy is negative for the short run. It's a drag. So I'm not seriously pessimistic, but I would be definitely more cautious.
Don't fight the Fed. Have we ever heard that before?
Oh yeah, we've heard it. And by the way, don't fight the Fed.
Okay.
But don't fight Washington either. If government expenditures are going to get cut, that's going to be a drag until we get used to it. So the long term might be good, but the short term could be a little painful.
Okay, to wrap things up, a trade war, which we don't know what the outcome is going to be for the U.S., Canada, Mexico, or the rest of the world for the matter. Labor market disruption, which I don't know. I can't even go through that report. Revisions up, down, all around. And budget spending cuts. I mean, to me, it all adds up. I know you're at 55 to 60%, which is still pretty low for a probability of the recession. Final question. What would make you make that probability higher?
Oh, what would make it higher? If we really went with the much more aggressive higher tariffs. I mean, we postponed them on Mexico and Canada for a month. If we put them on at 25% in a month, that would make me go much more negative.
Well, there you go. Blue Putnam, former chief economist at CMA, just telling us like it is, Blue. Really appreciate it. And this is all recorded, Blue. So we're going to go back. We're going to see about this and how things go. But right now, steady goes the market. We're going to wrap things up. Blue, really appreciate having you on. Folks, have a good trading day. Have a good weekend. Back with you on Monday morning.